being joined by the management of Afcons Infrastructure, Subramanian Krishnamurthy, Executive Vice Chairman, and Paramasivan Srinivasan, MD at Afcons Infrastructure, join us. Gentlemen, thank you so much for taking the time out and speaking to us at ET now. Mr. Srinivasan, I want to come to you first. What kind of top-line growth are you targeting for the next 3 years? Where will major growth come from? Give us a slightly near to medium-term outlook.
Due to the regulatory guidelines, we will not be in a position to tell you where we go or anything. But in the past, we have achieved 16% CAGR, and that is what it is.
Right. So, Mr. Param, coming to you again, tell us what is your outlook on the order book? Give us a sense of your order book.
We had at the end of March 31,727 crores as our pending order book, and first 6 months of the year, including L1, we have booked another about 19,172 crores.
On that note, Mr. Srinivasan, what is the outlook in terms of the order book going ahead? And pardon me, currently a major chunk of the order book comes from the underground and elevated metro segment as well. Do you expect that to continue, or which other segments have a higher growth potential going ahead?
We have every segment has its own potential at different points of time. Currently, urban infrastructure is at the highest level. At some point of time, few years back, we had surface transport at a higher level. So it keeps varying. We are geared to take opportunities in any segment it comes because of our diversified nature, both in terms of the segments and also in terms of geographies.
Right. Also, are you focusing on increasing your operational profitability, and what kind of margins are you really targeting?
We have achieved last year an EBITDA level of 11.6%, and we will not be in a position to give any futuristic view.
There is no reason why it cannot be sustained.
Okay, well, Mr. Srinivasan, a part of the IPO proceeds will go towards debt repayment. So what is going to be the debt position after this repayment? Could you give us a little bit of an insight on that?
No, we have, as on 31st March 24, our net debt is sub 1800 crores. And so what we would say is our debt equity has been maintained at 0.5% at the net debt level. So why we cannot sustain that is something which we can look at it.
Right. Mr. Paramasivan, talk to us about your CAPIC plans. Also, what is the total CAPIC plan for FY25 and FY26?
We have last few years we have been investing around 600 crores in CAPEX, and that gives a fair indication.
Okay, Mr. Subramanian, are you planning to increase the contribution of the overseas business from the current 25%? Are you looking to diversify into newer geographies?
We are looking at newer geographies for sure, but generally our domestic to overseas would remain 70-30 with slight variations here and there.
Also, Mr. Subramanian, what was the reason for reducing the IPO size, which was roughly around 7,000 crores earlier? Now I believe it is somewhere around 5,400 odd crores.
So there has been a pre-IPO with many investors wanting assured allocations, and because of the pre-IPO, we have reduced our IPO size.
Okay, and if you could shed some light on the overall demand trends you are seeing in the country right now, any new opportunities on the horizon, and also how are you planning to further benefit from the government's push on the entire infrastructure space?
No, we are there in all the verticals in the infrastructure space, whether it is marine or whether it is roads or whether it is ports, harbors, metro, everywhere. And government has plans across the sectors. And we have been a very successful EPC player so far. So this push by the government would benefit companies like us substantially.
All right. Thank you, gentlemen. Thank you so much for joining us.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.